Markets move fast, but the lessons of the last decade are clear. The right stocks at the right time can create massive wealth. Tesla went from a small cap curiosity in 2010 to a 10,000% winner by 2020. Nvidia, already a mega cap, surged nearly 240% in just 1 year. The question today isn't which one to pick blindly, it's how to position your portfolio to capture both stability and explosive growth. That's where a barbell strategy comes in, anchor in resilient mega caps while adding small cap names with high upside potential. Macro context: investors are betting on rate cuts. Futures suggest the Fed could ease soon. But inflation remains elevated, with core CPI around 3.1%, well above the Fed's 2% target. Tariffs add another layer of pressure, pushing some goods almost 2% above trend. Mega caps can withstand these headwinds, small caps thrive when costs drop or tariffs ease. This environment calls for balance, stability on one end, leverage on the other. Mega cap anchor: Nvidia dominates the GPU market with 94% share. This isn't a temporary advantage. Every generation of AI demands exponentially more computing power. Meta reportedly bought over 350,000 Nvidia H100 GPUs for its latest AI models. Beyond GPUs, Nvidia is expanding into robotics. Current warehouse robots are simple: they move shelves and scan barcodes. Nvidia's Jetson platform enables the next generation, robots that see, navigate, and make autonomous decisions. The robotics market alone is expected to grow over 20% annually for the next decade, potentially becoming $1 trillion opportunity. Networking is another growth engine. Last quarter, Nvidia posted $7.3 billion in networking revenue, nearly double the previous year. As AI clusters scale, networking spend grows faster than GPU spend. Hyperscalers like Amazon and Google are already testing Nvidia's Spectrum-X Ethernet fabric, potentially standardizing the AI data center stack from chips to cables to interconnects. Small cap talk: Credo makes high-speed connections inside AI data centers. Its components are already used by Amazon, Microsoft, and others. Revenue jumped 274% year-over-year to $223 million, with margins around 65%. Credo's growth isn't a single product story. On some platforms, its connections cover over half of server ports, and attach rates are increasing as clusters scale. Analysts estimate the total addressable market is 15 times current revenue. With $300 million in cash and no debt, Credo has room to expand aggressively. Megacap anchor: Amazon AWS controls roughly 31% of the global cloud market. Beyond storage, Amazon integrates AI into its stack with services like Bedrock and in-house chips like Tranium and Inferentia, which improve efficiency and lock in customers. Advertising is another major growth driver. Amazon generates $55 billion annually, over 25% of operating profit. More than half of US consumers start product searches on Amazon, not Google, giving it a unique advantage in e-commerce-driven ad revenue. Amazon is also building Project Kuiper, a satellite constellation aiming to expand global broadband coverage. Small cap talk: MasTec builds the infrastructure that powers AI, power lines, substations, and fiber networks. AI clusters need electricity, and government mandates are fueling investment. MasTec has $16.5 billion in booked work, including projects tied to the $42 billion federal broadband deployment program, positioning it as a direct beneficiary of policy-driven growth. Megacap anchor: Arista provides high-performance networking gear for AI data centers. Hyperscalers need open Ethernet fabrics, and Arista delivers with its EOS system. Over 30% of its 2025 revenue is expected to come from AI networking. Data center speeds are doubling, and Arista ensures clusters run efficiently with hardware and software solutions. Small cap talk: SiTime produces timing chips critical to AI systems. Even small timing errors can slow or halt networks. Revenue grew over 40% year-over-year, driven by hyperscaler demand. With high margins, no debt, and an asset-light model, SiTime is positioned to scale alongside AI adoption. Megacap anchor: ASML makes lithography machines for advanced semiconductors. Its high NA EUV systems are essential for the next chip-making node, enabling faster, more efficient processes. Each system sells for over $300 million, with orders from Intel, TSMC, and others. Shipments ramping through 2025-26 signal a new growth cycle in semiconductor manufacturing. Putting it all together, a barbell strategy doesn't bet on a single scenario. Mega caps like Nvidia, Amazon, Arista, and ASML provide stability and compounding growth through strong balance sheets and moats. Small caps like Credo, MasTec, and SiTime deliver leverage and upside when costs fall or policy supports growth. One side anchors your portfolio, the other accelerates it. Markets are complex, but a thoughtfully structured barbell allows you to capture both resilience and opportunity. This approach is designed to navigate uncertainty while staying exposed to some of the highest growth sectors driving the future of technology.